Welcome to Sam Buys Stocks. I'm Sam, and I buy stocks. So on this channel, I'm starting a journey. My main goal is to be able to buy a house, but I really want to achieve all of these different goals. Maybe if any of these goals resonate with you, you should go on a journey too. But before that, be sure to slam dunk the like button before we begin. My plan is pretty simple. I'm going to take $500 and put that into my investment account each month. And then each week I'm going to invest $100 or more into stocks, mutual funds, and index funds. Each Monday, I'll release a video discussing my picks and why I chose them. I'll also grade myself on a letter scale from A, B, C, and F on my overall purchase in order to try to improve my purchasing strategy as time goes on. Additionally, I intend not to sell my stocks unless I have some sort of extenuating circumstance or unless I need to empty out the portfolio to make some sort of major purchase. So with that out of the way, let's begin. My first pick is KB Home, a home builder with an emphasis on energy efficiency. I read several different investment reports on KB Home, and those reports indicate that KB Home is overweight, which means that it's primed for growth in the near future. So if you were to buy KB Home right now, it's likely that you'd be getting that stock at a discount from what its value will be in the future. Right now in the US, we're facing a supply shortage stemming from COVID, which has had a pretty big effect on home builders like KB Home. Because of this, they have lines out the door for people trying to build new houses, and they're having difficulty getting their hands on materials, increasing the price of a new home. This has also increased their amount of profits and to some degree, and it's also keeping demand relatively high in the short term, making me think that housing and home builders like KB Home are going to continue to be in high demand for the foreseeable future. In the longer term, I think housing values are going to continue to appreciate. We're going to continue to have more home builders be successful in the market as the population increases. At a market price of $31.02, the stock is also relatively affordable, provides a modest dividend, and will continue to be a strong performing value stock for the foreseeable future. My second pick is Williams Companies, Inc., a conglomerate that works in the production and distribution of natural gas. Taking a step back, energy stocks are a big part of the US economy. I think that investing in energy, and particularly in investing in diversifying energy, is a good plan long term as our energy needs grow and evolve over time. Williams Companies is a big player in natural gas, which is a clean burning energy source. This makes it less harmful to the environment than coal, gas, and oil, and it's also more economically feasible than other alternative energy sources like nuclear, wind, hydroelectric, and geothermal power, which makes it a stable investment in the market for energy overall. That being said, it's worth discussing the downsides to this investment. Right now, the energy sector is facing supply chain issues. It's suffering from the war between Russia and Ukraine, and it's also suffering as a result of the rise of inflation in the American economy. I still think that this stock and this industry is undervalued for the long term, and as a high dividend investment, it may be a good place to park some of your money. W&B has close to a 5% dividend, which is very good. What this means is that you'll get a check or some amount of money each quarter that, when added together over the course of a year, will equate to 5% of the value of the stock. Or put another way, if you purchase 20 shares, then over the course of a year, you'll make enough in dividends to purchase a whole additional unit of stock just on your dividends alone. Investing in high-yield dividend stocks like this is a great way to ensure that your money and investments are generating wealth for you while providing you the flexibility to sell the stock when you're ready to be rid of it. My third and final pick is Ellington Financial Inc., which is a REIT based in Connecticut. REIT stands for Real Estate Investment Trust, which in this case is a company that invests in real estate, mortgages, and other money-generating secured debts. REITs are a great way to invest in the housing sector, as a large amount of the value of REITs is invested into housing and mortgages. One thing about this REIT that stands out is its high dividend value, which sits at a whopping 10.5%. If you believe that investing in the housing market is something you want to do because you believe in its long-term success, then perhaps you should consider investing in Ellington Financial. Another thing to factor in is its relatively low price, where it's sitting at $17.08 per share. So now let's discuss how much I plan to invest in each stock. So my intent is to invest $500 a month. And since I'm starting in the second week of April, I'm going to double up from $125 to $250. After tuning my investments a bit, I settled on purchasing 3 shares of KB Home, 2 shares of Williams Companies Inc., and 5 shares of Ellington Financial Inc. This isn't exactly an even split, but it's pretty close. It has a slight favor towards KB Home and a slight bias against Williams Companies Inc. The most shares I purchased was for Ellington Financial with 5 shares, and a lot of that has to do with its higher dividend yield. Now you can see a table with purchase costs, the quantities purchased, the dividends per stock purchased, the overall dividends for each stock, and the total dividends for all stocks combined. With this table, you can see that there's a bit of a favor towards the Ellington Financial because of its stronger dividend performance relative to the other 2 stocks purchased. Here you can see how powerful a high yield dividend stock is compared to the rest of the portfolio. High yield dividend stocks are good to have because they'll always be able to generate some wealth for you relative to the overall performance of the stock. Assuming that the stock doesn't just fall out of the market, then it will always be able to generate some wealth for you over time, particularly as you accrue higher quantities. This goes to show that having reputable brand name stocks with high yield dividends are a good way to improve your portfolio and a good way to accrue wealth. Overall, I'm going to give this purchase a rating of C+. There's some good things about it, and there's some bad things about it, but overall, I feel like C+ is a fair grade, particularly for this amount of money invested, and let me explain why. On the positive side, this purchase targets high-yield dividend stocks, which are always good to have. High-yield dividend stocks tend to beat most of the other things that people will put their money into just to park it, such as virtually all checking accounts and probably most savings accounts as well. On the negative side, it's easy to argue that this purchase isn't diversified enough in a few key areas. First, all of these investments are stocks. There are no index funds or mutual funds in this investment. And that's probably not the best thing to do because investments like index funds and mutual funds ensure that your money is being spent over a large segment of the market rather than just one stock, which is more random and more likely to just go up and down. In order to be properly diversified, you'd want to include some amount of index funds or mutual funds. In fact, most of your investment would likely be index funds or mutual funds. However, it is nice to pick stocks and then just kind of rely on the industry they're in to sell their value for the long term. Second, I could have invested in an additional sector. In this purchase, I invested in a REIT and in a home builder and in an energy stock. I would say that the REIT and the home builder are closely enough related to where you could say that they are close industries together. Instead, I probably could have bought something like a healthcare stock or a tech stock to be a bit more diversified across different things. However, I chose not to do this because a lot of my other portfolio is in tech stocks, so I already feel pretty well diversified in that space. As for healthcare, I just haven't done enough research on that to feel comfortable investing in that compared to some other stocks, but that's something I'll definitely be looking into in the future. Because there are multiple negative points and one positive point on here, I feel that my grade of C+ is probably justified. But who knows, maybe these investments will prove to make some strong returns down the line. And now it's your turn. I've shown you what I think is a pretty good investment for your money, but what are you going to do with that information? Are you going to take the money that you might normally spend on a Starbucks and then put that towards investing in yourself and creating wealth for yourself? Or are you going to continue to live your life as you are and not make that wealth for you for down the line. If you choose to start out, you should start investing knowing that day trading is not the way that you're going to become a millionaire. Becoming a millionaire is supposed to be a boring process where you do slow and long-term investments to gain value over time. And then as time goes on, your money is going to turn into investments, which will then turn into wealth, which will then cause your money to be worth more than it was when you originally started. If you do that for long enough, you should be able to become a millionaire almost at any income level. At the end of the day, I'm just some guy on the internet giving his own take on some sort of investment that may be good for you to make. And it's up to you to decide whether or not you want to follow this information and whether or not you want to invest at all. Whatever you do decide to do, if you do decide to invest though, I would suggest be consistent with your investing. Put more money into you. Invest in yourself. Invest in things that are going to bring more value to your life and maybe bring you some more finances like this. But overall, I think the message should just be, do it consistently. With all that being said, be sure to slam dunk the like button, subscribe to the channel, and ring the bell so you can get notifications for my future content. Anyway, thanks for watching.